Hi everyone, this is Scott and welcome to the trade report video for the week of December 11th, 2016. So first up, let's take a look at the SPY, the SPY here. You can see that we're now into new high territory here after having a brief reaction. The market last week basically just kept continuing higher. There's strength across the market. You're seeing it across basically everywhere, all sectors except for maybe biotech's probably lagging behind the other sectors, but there's a lot of money flow into a lot of the kind of brick and mortar type plays, the industrial minerals and metals, the coal plays, the oil plays, steel plays. A lot of these plays, you're seeing a lot of money flow into that. So we'll talk about that and kind of the approach going forward from here. But so there's the SPY. We can see that very strong after having basically just a very brief consolidation. IWM, same thing for the small caps here. We had the big run up after the election, a brief rest for a few days, and then ramped up to new highs. So the market here is still very bullish. There's a lot of people, saying, it's overdone, whatever. And if you're using, some people like to use the relative strength index or RSI to determine oversold and overbought levels. I don't really put much, I don't even look at the RSI. I just, I found that indicators are lagging, and really the only thing that matters is price action, chart patterns, and things like that. So, but there's still plenty of chart patterns setting up in the market. Some stocks are extended, so you can't just blindly buy just any strong name, but you want to wait for a pattern to set up where you can trade it, and we'll kind of discuss some of that as well. So there's the IWM, and then just really quick, we'll take a look at the XLF here, which is a financial ETF. And the financial sector has been very strong. There's been a lot of setups there. I haven't really capitalized on it, but there's still a lot of good looking charts in the sector. Some of them are extended and kind of broken out of their bull flag patterns. So they had some really great patterns set up, and then they've broken out. And so now some of them are extended. Some of them there's still some setups there. Then we'll take a look at those. So the financials have really been leading this market. XLE is the energy select index, and you can see here after it broke out of this consolidation range, it's still up, and there's still a lot of energy plays, and that look good, and we got some on the watch list as well. And then real quick, look at IBB. So a couple of the plays I had last week broke down, CLCD being one of them. I had to cut that one, but you can see here that ever since the election, this sector has been lagging. It's been pulling back, and it's really having a hard time getting going here. And so maybe it's due to Trump's mention on the reducing the drug prices has affected maybe the biotech index, but for whatever reason it's lagging. So the opportunities, I'm going to start focusing on elsewhere and looking over in some of these other names, but I'll still keep an eye on it. But just to note that the biotechs haven't really been leading this market, and it's been a very strong market, but the biotechs haven't really been running like the other names have. So that's that. And so now let's take a look at some of the trades from last week, and some of the ideas and how they kind of played out from our watch list. So ARRY was a name that I've been swinging for several weeks now. I finally sold this one, took my profits on it, basically due to the fact that the IBB has been lagging, and I want to start looking for stronger names with more upside potential here. This one, it still kind of follows its trend line support here, so there's really nothing, hasn't really broken down yet. There's nothing really saying that this is a sell at this point. It's more of me just sitting on this thing for the last few weeks, and just kind of wanted to lock in my profits and reassess. So there's ARRY. KTWO was a new trade for me. I bought this one basically through this breakout here. I got in around 975. So this one had a nice breakout and then ran up, and now it's kind of consolidating. So this is constructive. I don't see anything warning here, anything that's really saying that to get out of this one at this point. It did have a brief pullback intraday on Friday, and then it recovered most of it. So it looks like it's putting in kind of a bull flag pattern consolidation range here before the next leg up. So that, basically the breakout would be 20, 21, a little bit above 21 here, above these little wicks of these candles here. So I still like KTWO, and I'm still swinging this name from 1975. So I still have this one. So CLCD was one that I had to cut on Friday. Broke down quite a bit, broke down 9%, but I was thinking that this one was going to break out through basically 40. It had a nice, the chart pattern was setting up very nicely, and then this one just failed. And sometimes that happens, guys. You're not always going to be right, and you've got to be willing to, get out of a losing trade when you're wrong. And it just happens to everybody. And the quicker you can, cut your losses and move on to the next trade, the better off you are. Otherwise, mentally and emotionally, it's going to affect you sitting on a loss. So, but anyway, this one broke down, and maybe it sets up again. But once again, the biotech sector is really lagging this market, and maybe something turns around. But at this point, I'm going to keep my focus on some of the other sectors for now. So next up, TRS. This was one on our watch list here, and just to kind of show you what you really want to look for in these stocks that break out. So once again, the more you see these patterns, the more your mind's going to get wrapped around, what to look for on a chart. And so this one had a big breakout and then a sideways consolidation, a very nice bull flag, okay? And then this one, basically the resistance here was like 2170. And as it broke that, just had a multi-day run up, okay? So this is now at this point, it's a little bit extended for an entry, but these consolidations is what you want to look for when you're buying a stock. You want to buy them as they break out of these bull flag patterns, and then ride these things up as much as possible. And but as they get extended here, you can't really enter. You got to wait for them to set up again. So TRS, just to kind of show you a bull flag pattern that was on the watch list that worked out. I didn't trade it, but there it is. ORIG, this one was another one on the watch list. We had a spot here around $1.90, and this one worked. I didn't trade it, unfortunately. Actually, I did trade it, but I cut it short too quickly. But Friday was a big breakout day for this one. So the pattern was there. Just took my eyes off of it, but it ended up working out. And there's still a lot of strength in the oil names too. This one may be a little bit extended at this point. So, but there's some other ones that haven't broken out that still look like they're good risk reward at this point. So there's ORIG, one that actually did break out. AMID was another one. Here's the consolidation range here, and then so there's a breakout through 1540. There's a run up, and then once again, the profit, if you were to trade this one, if you did trade it, use the depth of this pattern. So that, maybe 13 to 1540, take that price difference there, add that to the breakout point, and there's your first price target to take profits. So STML, once again, it's another biotech that's been on the watch list, and this one hasn't really broken down yet, but so it still looks okay. It's still kind of supporting this rising trend line like this, and the breakout I would consider now. It used to be kind of in this 14 range, but it got rejected, and so I would wait until this thing can move through 1450 for an entry. So this one's not broken down yet, but the sector is just weak, the biotechs. So Disney was one, and I think Disney is a good example of, once again, another bull flag type pattern. Let's see here. You had this breakout, sideways consolidation, and then as it broke through 100, just had a huge run up. And this is a good example of what Jesse Livermore used to talk about in his book. Is it How to Trade in Stocks, or the other one written about him, which was Reminiscences of a Stock Operator, where he uses $100, $200, $300 pivot points and how a stock acts as it breaks through that pivot point. And so this one, as it broke through 100, it just had a really quick run up to 105. And it's a great example of how, once you break through these pivot points, how you can have a really fast move. So there's Disney. This one worked out. Once again, another breakout, consolidation, bull flag, and then move to new highs. Let's see. STAA, another one from our watch list from last week. This one is trying to break out of a bull flag right now. And so this one I think looks higher. It's kind of a slow mover, but this one's not too extended. And this one would, if you wanted to trade this one, this one actually looks like it's going to go higher. Let's see. KRNT was a nice one we had, I think Monday or Tuesday on the watch list. But here's the breakout point right here, $12. And once it broke, boom, just had a really quick run up. And, the depth of this pattern was $1. And so this one quickly went to 13 and even above that. So you could have taken partial profits and then let some more run. But just a great example how these bull flag breakouts and how they can really run once they get through there. So another nice one there. AMRI, this one had the breakout. There it is through this kind of range right in here. So this one still looks good, even though the sector, it's a biotech. This one actually looks higher. AMRI, I still like this one. Ruby Tuesday was a nice one. Had a nice spot here at 320. And mentioned this one earlier in the week. It's a restaurant, and a lot of the restaurant stocks still look strong. There's still several of them on the watch list. And this Ruby Tuesday, it might pull back, it might consolidate for a higher move too. I still think this one's going to go higher, so maybe need a little bit of a rest for next leg up. But Ruby Tuesday looks good. ATI, this one finally broke 18, and the importance of 18 on this one goes way back. I mean, look at this chart, 150-day chart. I mean, look, this is back in August here. Look at this resistance, very important resistance, finally broke. And so this one, if you're going to trade this one, I think you could use maybe 16 as an average depth here, this pattern. So 16 to 18, 18, so that's $2. So I think this one can go to 20, through 20, somewhere in that area, maybe even higher. So ATI looks good. So it looks like it's going to continue higher from this point. Verizon, so this is basically a trend reversal. You see this downtrend here, lower lows, lower highs, and then finally it breaks through that downtrend. Basically, kind of draw a trend line like that, something like that. Broke out through that trend line, put in its first higher low, and then broke out through the recent pivot high there. So Verizon looks like it's going to go higher. It's a big company, slow mover, so but here's a bank stock, ISBC. Here was the resistance here at 14.1. This is still early. This is a bank that if you want to trade one of these bank stocks, this one looks like it's still got more momentum. It's not too extended from the breakout point. The breakout point was like 14.10, and this one's still hanging around like 14.27. So I think this one's going to go higher from this point on. So some of the banks are a little too extended beyond their consolidation ranges. So, but this one still looks okay. And that's ISBC. Let's see here. Call was a nice breakout, another communication stock. This is a Magic Jack. So here's a pattern here. The nice run up, consolidation range, and then kind of broke out like that at this pattern here, and had a nice move on Friday. So okay, so that's it for last week. Let's move on and take a look at some of the setups we got for this upcoming week. And okay, so first up is this GSM. So GSM, I added this one on Friday because I just love this pattern. It is a perfect bull flag. This is an industrial mineral company. So exactly in the sectors, it's just seeing a lot of the momentum here. But this one had a big run up in a consolidation range, and then a big, basically closed on highs on Friday. And so I'm thinking that this one's going to break out of this flag pattern here. I got in around 1176, I think, and so maybe the breakout, the clean breakout, is a little bit higher than 12, but I would kind of use this level here since that was kind of a recent high right around there. So it's right there at the breakout. I think this one is going to break out of this range and head higher. So GSM, I have a position in. I really like this one. Just a really nice bull flag pattern. FGL, this is a life insurance company, and it just has a really nice spot here at 24. Basically right around this area here, you can see it was kind of a resistance. It's tapped it several times here, and basically had some pretty good volume on Friday and closed right there at 24. So this one, I think this could break through 24, maybe go to 24.50, somewhere in there. But this is a nice setup for Monday. FGL. Okay. Rosetta Stone. So I've been sitting on this one for a couple days. I bought in, so Thursday. I was thinking this thing was going to break out through 850, which is a key resistance. Right there, 850. Okay. And so it didn't do it, and then I waited, and then Friday it finally went, and it closed, through that 850 point. And so this was a nice ascending triangle pattern, like this, and the fact that he had resistance back here, 1, 2, 3, tapped it 3, 4 times, and finally broke. So I'm looking at this one maybe for a $9 target on this RST. That's probably where I'll sell out. Maybe if it gets in the 875 area in there, maybe I'll take some profits too. So, but I like this one. I like the pattern here. So it's kind of a very thinly traded company. It's only traded average volume like I guess 80,000 shares, but the pattern's nice, so I went ahead and traded it. So next up is Habit Habit Restaurants. So once again, we see the pattern that these bull flag pattern playing out in this name, right? So if we look at kind of a longer term chart, just a steady downtrend, right? I mean, nothing. You can kind of draw a high across. See that? For each of these highs, this is a longer term downtrend, and then you break that downtrend line and you start to trend up, and you get this really big spike on volume, right? So that's telling you the line of least resistance. The major trend is now up, right? So zooming back in, now we want to look for where do we get in, and so here's the breakout, the big move, and then the consolidation range, and so basically right around this $17 area is the breakout. So I think this is a perfect flag breakout setup. You had the breakout, you had the consolidation, the pullback. And then now it's ready to ramp up and potentially break out through 17 to make new highs. And on top of that, the restaurant sector, like we've seen with Ruby Tuesday, and there's some other ones, is strong. So when you see, looking at the sector, you're seeing strength in the sector. It gives you more confirmation on your trade. So HABT I really like for next week. So NEO is next up. So NEO is, I think this is a medical company, but what really makes me like this chart is this is on the verge of new high breakout. And if we go back here, we'll see that, basically right around this 850 spot, back here in the middle of July, it tapped that 850 spot and failed. Went all the way back down here, and then it tapped it a couple weeks ago, and then now it's back right there at like 943. So the 950 spot on NEO is very important, and it looks like it wants to break through that. And so if we get that breakout to new highs through 850, it could really have a really nice move through that spot. And so this will be a top watch for me on Monday, early next week. Be watching this one for a breakout. I'll probably trade this one if we get that 950 breakout. So NEO looks really good. So DWSN is one of the many oil plays. There's several others. Some of them are extended. Some of them, kind of look like this one, where if we, let's see here. So let's see here. So yeah, it's just basically consolidating in this range for several months now. But then this pattern here looks really good. It's not a clean break through 8, but 8 looks like in a very important level based on opening and closing prices right in this area here. And you can kind of use this as your guide for a stop. But I really like this one for a breakthrough 8. It's a really nice looking setup here, this oil play here. I think this one's going to go higher. Probably break out through this recent high up here, 830. So DWSN, really nice looking setup. IDN is basically, once again, another nice bull flag, a big run up, consolidation, and then it's right there at that testing spot for a breakout to new highs. So just another nice bull flag pattern. There's a lot of those in the market right now. This one just looks really good. BATRA, so this is a media company, so I don't really know anything about it, but I know this pattern looks really, really good through this 21 spot. So here's the big move up, pull back, retest, a higher low, kind of this kind of putting an ascending triangle type pattern, something like this maybe across the lows. But so this one, maybe it tests it and puts an even shallower low and puts in a longer term base here. But this one looks like it wants to go through 21. So if this one goes, 21, breaks through 21, it'd be a nice trade for a move higher. That's BATRA. Alcoa AA. This one has a nice spot here at 32. Okay. So there it is, once again, run up, pull back, consolidation, and then, potential breakout through recent highs here around 32. And that's a very good risk reward. This one looks really nice. Alcoa. Joan, this is another energy company here. Basically has a spot here at around $5. Looks like it's going to go higher through this $5 area here. Basically it's entering some multi-month highs here, and the energy sector is strong right now. So Joan has a nice looking setup. Let's see here. Okay, this is this is Red Robin. So this is another restaurant stock here, and once again, just a really nice run up, consolidation, bull flag type pattern here. So this one looks good here. Through this breakout through this recent high here. Maybe it should be right in this area. But anyway, very nice pattern here. Consolidation before it moved higher in this name. Let's see, NTB. So here's a bank that it's not extended, so it's still it looks like it's a very nice buy point here. So run up, pull back, and then it's trying to break out to new highs right through this 30 spot. So this one I really like. And big volume on Friday too, relative to its previous volume. So this one on a break of 30 would be a nice trade, a nice breakout. And then, once again, kind of use for a profit target, you can use kind of the depth of this pattern here. So maybe 2760 to 30. So add that delta in price, or the difference in price between 2760 and 30. So $3.40 is it? So, or $2.40, and then add that to the breakout, and that'd be your first target there. So there's NTB, nice looking bank. And next up, I want to talk about the fertilizer companies, and these names are looking really good. There's several of them in the sector. There's UAN, which is one. There's Mosaic, MOS. There is CF Industries, and then there's POT, potash. So first of all, I want to say that let's look at a longer term trend of this UAN. So you can see how this is a downtrend here. Basically, if you guys ever read Stan Weinstein's book, which I recommend to understand stage analysis of stocks, there's basically 4 stages. There's an uptrend, stage 2 uptrend. Well, first there's a stage 1, which is basically a basing period, and that's stage 1. There's stage 2 is a breakout of that base into a stage 2 uptrend, and then stage 3 is basically the topping stage, and then stage 4 is a downtrend. And so this would be considered a stage 4 downtrend right here. Okay, so here you can see that, and it's defined by lower highs and lower lows, and there it is. And then as it breaks through that downtrend, it basically puts in a reversal pattern. I'll zoom in a little closer here, and you can see the transition where you get the first high or low, and then you get this test of this recent high right in here, which creates a head and shoulders pattern. So this is a transition from a downtrend to an uptrend, and then now that it's broken through this, basically the 520 area, and look at that volume over the last several weeks. This thing is beginning to make a new stage 2 uptrend. So it's still early, but this one it's still a little bit too extended for an entry now. So what I'm going to be doing is watching this UAN for potential pullback to maybe this 520 area, or some consolidation, maybe a bull flag type pattern for an entry in this name, because I really like this UAN, and I like the sector, the fertilizer sector right now, because there's so much strength in it and across the sector. So I'll be looking for an entry in this one if we can get some type of a really good entry point in this UAN. And just take a look at some of the other ones here. Mosaic, you can take a look here. These are 200 days, but we go back a year, we can see this is basically broken out through this 31 level, which was resistance for quite a while. So maybe like right in here, you can see that. So this is what you're seeing right down here. This is basically a stage 1 basing period after a long-term downtrend, and so now it looks like it's breaking out into a stage 2 uptrend. So Mosaic is one to watch too. This one looks like it's going to be going higher, although you kind of want to wait for some consolidation. Potash, same thing, right? Downtrend, basing period, longer term, and then basically a breakout, out of that consolidation range into a stage 2 uptrend. And just kind of look, you look a little closer here. See how it's kind of extended here on the daily? Wait till you get some type of range consolidation, some type of bull flag type pattern, something to trade off of to where get some good risk reward there. So potash is one to keep on your radar. And then see, another one that's been on fire is this IPI. This one had a really nice run up, and once again, it still looks a little bit extended. So I'm going to see if I can find a good entry point on this name. But once again, let's look at a longer term chart. This thing has been really beaten down over the last, 2 years ago it was 14, and then it went all the way down to $1 somewhere. But here's a downtrend. Here's the basing period, where it bottoms out, and then it begins this new stage 2 uptrend. So just because it's in a stage 2 uptrend doesn't mean you just blindly buy. You still got to wait for a good risk reward area to enter some type of consolidation, pullback. It'll give you a good risk reward. So, but this one I really like, IPI. Definitely be watching this one for a good entry point this upcoming week or next week, a week after that. So IPI, and then let's see, CF Industries was the other one. That one broke out of this range here. So this one not too extended at this point. Basically had a range bound, and the breakout was right around 30. So this one doesn't look too extended like some of the other names. But let's take a look at the longer term chart. You can see here where it's beginning to make a nice new uptrend here. So I really like these fertilizer stocks. Keep an eye on those. The whole sector's strong at helping confirm your opinion, and it's mainly because I think that Donald Trump is about putting in money into infrastructure and things like that that Obama didn't do. So you're seeing a lot of money flow into those sectors. And anyway, that's about all I got for today. Um, the finance stocks. Actually, let's see here. There was one more. Let's see. I want to look at. Not that one. Let's see. Well, basically, what I was basically trying to say is, you know, the banking sector. The banking sector, a lot of these banking names have broken out. They had a big run up and then they consolidated, which is what you want to see. And then they broke out of those flag patterns and made new highs. But many of them are extended from that level now, so you can't really buy them up there with a, without, because you have a tend to pull back and consolidate again at that point. So you don't want to buy them when they're too extended. So wait, there's still several names in the banking sector that are not too extended and still kind of like this NTB here, where they haven't really broken out and gotten extended at this point, that provide good risk reward. So look for some of these names if you want to trade into banks, like NTB, which looks good. And but anyway, that's all I got for today, guys. Hopefully you have a good week coming up. And we'll see you guys on Monday. Thanks.